Welcome back, everyone. Boys and girls, we got the band back together today. We got Mr. Eric Crown, Crypto's Cave on the other end of the live. How are you, mate?
Beautiful. It's good to have the crypto Simps back in action, man. And hopefully everything's going all well.
Everything is going fantastically well, but it sounds like you got a ton of bad news for us. Should we slap a whole lot of urgents and emergency videos on top of this one?
Yeah, there should be a few warning signals in there, some O faces and all that good stuff, as you already know. But at the end of the day, it all comes down to statistics and probabilities. So I figure that we can run through a few of them right now, why I'm kind of leaning towards the downside as of this moment, and what essentially would make me change my mind and subsequent targets for that, as well as time into. So cool. I suppose now would be maybe a good time for some chart action.
Let's crack on with the chart action, but I'll just let everyone know Eric's details will be in the video description. It's been a long time since we have come together for another Crypto Simps episode. It'll maybe when the bull market kicks off again, we'll get into something more regular, but for now, this is what you're getting. So let's throw on the charts, mate. And yeah, Eric's YouTube and Twitter will be in the video description. So go over and join Mr. Eric and his lovely weird ass crown thing in the background.
Oh man, how dare you insult my Spartan helmet, man? I bought that straight from Santorini.
I did see it on your Instagram, but yeah, you look at my room here and I'm basically bare. I've got nothing. I'm boring.
Bare bones, man.
Yeah.
Cool. Yeah. So here's what I'm looking at. I figured that, in preparation for a video like this, it's probably better to talk about higher term time frame ideas, simply because, I figure most people are most interested in such things. So in this case, we're looking at a daily chart of Bitcoin on CME exchange. And there's a few things of interest here. There's a major volatility compression that we've been observing basically on the daily since late September. And to put this into context, when volatility gets incredibly low and stays low for a long time, it implies that the resolution of that, or in Wyckoff terms, the effect is typically going to be, bigger. So in this case, we are observing similar volatility levels for a period of time that has been as low as a few other times in Bitcoin's history on CME. This would be comparable to July of 2020. This would also be comparable to October and November of 2018 and February and March of 2019. What do all these have in common? Humongous moves. We're talking about this area over here. Oh, Jesus. Okay, that's not going to work well on this chart. Apologies.
I hate when that happens to me too,
yeah. Well, basically, we're talking about, humongous moves throughout Bitcoin's history, both to the downside and the upside. We're talking about 50% moves to the downside right here, talking about 3x, 4x moves to the upside over here. And we're talking about more recently, in 2020, that humongous uptrend that we saw started in about June, July or so, as Bitcoin really turned into a macro bull market. Anyways, in this case, we are once again in the similar levels, and the signal that I'm looking at is a volatility versus momentum signature. Volatility is represented by this indicator right here. This is the BBWP indicator. It's basically just Bollinger Bands with percentile. And anytime that we've seen it get to extreme lows, which are defined as below 10 percentile or more, so anything below this green horizontal bar that my cursor is currently on, over the full history of CME, of which there's been many iterations for this, there's been an average move of about 24.25% from the expansion phase that follows after the initial compression. And of that move, it takes on average about 2.5 weeks. And the stochastic also has been correct in getting the direction of that volatility expansion for 83.33% of the time. So in this case, we do not have expansion just yet. Yeah.
Just on that stochastic, how many data points was that? Was that 3 or 4?
Say that again.
The stochastic, getting this particular move, you showed, I think it was 3 or 4 times that we've been this low. Is that measuring those 3 or 4 times, or is that all of it?
No, this is for all of it. And what we were looking at earlier was the volatility portion of this, not the stochastic, which is just a momentum oscillator. So the next thing, and the most important thing, and the most relevant thing in the short term here, is what would actually confirm this signal. Well, we have to go back to the volatility component of this, represented by this indicator, the BBWP. And we need to see 2 things. We need to see, 1, the BBWP indicator itself having a positive slope and above the moving average as well. And then 2, to fully confirm it, we need to see it get back above the critical zone right here, which is at 10 percentile. As you can see right now, we have none of those things. So this can take a little bit longer. I think at most, we're probably looking in the second week of November to resolve this. But once we do get resolution and confirmation on the volatility component, then we go reference the stochastic oscillator component, and whatever direction that it's currently positioned in is the more likely direction for Bitcoin to move in, in a pretty big fashion. So in this case, right now it is angled to the downside. Problem is we don't have confirmation on the prior conditions, so this is less interesting as of right now. But it gives us an insight as to where the pivot points are and where sort of things perhaps change around on a daily basis, as this is a daily chart. And for right now, daily stochastic momentum is about to be pointed to the downside. It will officially confirm to the downside with any sort of a closure today, Friday. This is being recorded on the 21st of October, below 19,200 basically on CME. So that is to say that if Bitcoin closed below that level today, risk remains to the downside. Highly probable move continues to be more angled towards the downside. Again, we're talking about an 83 basically percent chance. Which is very, very high, but still not the same thing as 100%. So, there is weird things that happen here, but it gives us an idea of, of what to kind of expect and a time frame of what to expect as well. Again, about 2.5 weeks on average. And we can also take a first standard deviation of the analysis to get some areas of interest for where the move might finally land once it gets going. So that's what I've done right here. So the average is about 24.25. First standard deviation represents a range between about 15% all the way up to about 33%. So in this case, let's just make some assumptions here. Let's say that it does happen to the downside, which I do think is more likely. I mean, the one thing that really makes me a bit apprehensive with saying that is just, and tell me if you agree with this, by the way, Jason, but it really does feel like one of those times where everyone's kind of thinking like down, right? Everyone's kind of thinking on the same page, right?
Yeah. It's like, it has to go under 10K. All I've heard is like, it's going to go under 10. It's got to go under 10. It's got to go to 12, all that sort of stuff. And just with your timing, it sort of works out quite nicely. Not that I pay attention to that much of the news, which I'm sure, you don't either, but around, I think it was the first week, maybe the 2nd of November, you've got the announcement from the Fed. So that obviously could lead to some of that big volatility.
Very likely does.
And maybe get a wick down and the wick back up into the range. So we'll wait and see.
Yeah, absolutely. So, just applying some of those numbers here, let's just assume it's going to go to the downside. Well, 15%, which is the lower end of the first standard deviation, would put you around about $16,500. 24% puts you more around about $15,000, and 33% puts you about 13-ish. So those would be kind of my areas of interest if Bitcoin does break out to the downside. Again, until we actually get full confirmation on that signal, though, it's still, still neutral essentially, and we could just as easily see that happen to the upside, I suppose. So, to the upside, you're probably looking somewhere around $23,500, and maybe even tags the summer highs as well, and potentially more than that over time. But I would say that would be the highly probable move to be looking for. Again, once we get confirmation on that. So I expect that today, Friday, is probably still going to be a range day, probably still going to be boring. And I know people don't necessarily like to hear that. It's not sexy. I do think that we're probably looking more towards the end of this month of October. And probably, I think what you just brought up is going to be the actual catalyst, is going to be the Fed meeting. And well, once he gets resolution on that, very likely volatility pours in, and we're all just kind of waiting in between here now. So yeah, that's essentially what I'm looking at right now. That's why I'm more angled towards the downside. That's why I'm more positioned towards the downside. But we still probably got another week or so of this, and then fun times after that, I suspect.
What would invalidate that particular setup?
So there's not really an invalidation once the volatility component is confirmed, because at that point, at that point, it either plays out in the direction or not, but the move on average the average is the average. So it's more or less an invalidation of the direction, which at that point, the invalidation of the direction would come with a close above or below the last high or low that is opposite of the current direction. So let's say, so that probably doesn't make too much sense. Let me put this into an example. Let's say that the volatility component is confirmed and the stochastic is pointed to the downside, as it is right now. And then Bitcoin moved to the upside. you know that the upside is then confirmed and the downside is very unlikely to happen if Bitcoin were to move back above the last local high, which in this case, it's basically last week's high. So if Bitcoin were to go back above there, then you'd be like, okay, well, the stochastic component is going to be wrong on this one, but we're very likely still going to see that 24 to 25% move to the upside. So the move percentage doesn't necessarily get invalidated. The direction would be just invalidated in favor of the other side, basically.
And if it was to wick to the upside, I could just imagine, you let me know if you agree with this, it's going to bring on a lot of FOMO and stuff like that to the upside. But even with those percentages, it doesn't get us back above any of those significant highs of 25K. However, to the downside, that brings far more emotion into the market because it's not that far that it has to drop to then bring out all of the bears saying we're going to 10K. So what do you normally say to your viewers, when it comes to those extreme emotional times, like how to avoid it and, what to look out for, what are they going to say, those sort of things?
Yeah. So it's something, right. So it's something that I deal with myself, and it's like, it's like you can be right on the direction. And then as soon as it goes in that direction, you're like, wait a second, my target wasn't aggressive enough. I should get more greedy, basically. And my main message would be, stick to your prior guns, because right now, when things are the least volatile, you're probably in the most logical headspace. And so whatever decisions that you're making right now are probably going to be better than when things start, screaming, because it will inevitably start screaming. It's just a matter of time here. And so having those plans laid out in advance is what's going to actually make you successful. And here's the thing, and what I'd really want anyone to kind of garner from this: you don't need to get the whole damn move in order to make a ton of money. You don't even need to get you just need to get some of it, really. And whether Bitcoin goes down to like 15,000, 13,000, or if it really hits some of those mega bear targets below 10,000, these are still very tradable events, and you're still going to make a ton of money. And the realistic sort of background thing that I'd want to be having is like, look, just take it one step at a time. From 20,000 to 15,000 is what? That's like a 30% or so move. Or am I doing my mental math correctly? It's somewhere around there.
Yeah.
Something like that. Yeah. It's like things aren't just going to go down in a straight line, or they're very unlikely to go down in a straight line. So, they probably hit one of the big targets first, consolidates again, and then trends again if it's going to trend again. So you'll have another chance to make a decision, but it always feels better, at least in my experience, to realize some of those gains. So my main message would be, don't fall into the same trap that I've definitely fallen to in past times, where it's like once a move gets going in your direction, you like get more and more greedy. No, stick to your guns and realize that you can always put on another position if whatever sort of edge or system that you're using calls for it. Other than that, just realize that it always comes down in these times, right, where people like become, as you're kind of saying earlier, ultra bearish, where you start talking about like $10,000, $6,000, $4,000, $3,000 targets. I've seen all these sorts of things. And these, again, they're possible, but just understand that it's unlikely to be a straight line. I would have a hard time looking at Bitcoin and saying, it'll probably just melt like literally 60%, 50% without a single stop along the way here. And again, you don't need to catch that whole move in order to make a ton of money. I mean, you capture a portion of it, wait for the reversal, do the same thing. That's what real trading is. I know that everyone not everyone, but it's a common thing on social media to pretend that you're perfect, that you sell literally the ultimate top and you buy the ultimate bottom. Fair enough. Maybe you do. I know that I do not, and you don't need to. You don't need to in order to make a rather healthy living.
And the targets to the downside, I was just wanting to mention, I've talked to a lot of people, like they've done quite a few interviews, speaking with other traders and things like that. So just to mention, Eric is a short-term trader, and you will have your longer-term bags maybe of Bitcoin. But just to clarify that, because some people here are just looking to DCA into something long-term and they're not looking to trade short, but your specific focus is to trade the markets. That's your game. So, just differentiating those. To the downside, now if we go back to the macro, looking at the obviously bigger picture, the levels that I've identified for a breakdown, should they break lower than particular levels, that would then put Bitcoin into a extremely weak position moving forward over the next several years. And so although we want to see downside, obviously to pick up the cheapest Bitcoin possible, should we break certain levels, that's obviously a space that I think, well, it's cheap Bitcoin, but it's going to be a long time before I see some sort of returns. Do you have a specific price in mind from your analysis of where that level would break down, where you would say, look, Bitcoin's probably going to go up in the future again, but this now sets it into a long grind at lower levels?
Okay. Yeah.
Yeah.
I think I see where you're going with this. So it's basically like, what price, if Bitcoin were to basically go below, would imply that this thing ain't going to be tagging all-time highs for another 10 years or something like that. Do you have that right?
Yeah. Yeah.
Okay.
Like an altcoin where they pump and
Yeah.
then they dump and you go, look, if it's sat at this support zone, it's probably not a bad buy. But if it breaks beneath these support zones, this thing is gone for a long time.
Yeah, so just looking at it right now, if I saw higher term timeframe closures below, let's say about 11,000 here on the monthly, that would indicate to me that this asset's not really worth. If you're super long, like if you're looking for something to reverse into a long-term uptrend and retest the highs and everything, that's not happening anytime soon. Like probably not within the next 5 years. But
so if it gets under $11,000 on the monthly, remember macro, just to reiterate that for people watching macro, it can bounce under there for a few days and come back above for the close.
Exactly. Yes.
But under 11K would be a critical breakdown level of, say, look, Bitcoin's probably off for a long time. We're not going to see this $1 million by 2030. Those sort of ridiculous calls.
I mean, it's like when you think about $1 million by 2030 or whenever, you have to think about what sort of world would we have to be living in for that to make sense. And it might just be that you get your $1 million Bitcoin, but also your morning beef or morning eggs are going to cost like $1,000 as well. It could be
if you're allowed to buy them. But we'll go down that.
You're gonna have rations, okay, and you get your little cricket powder too, and there you go. It's all good. Yeah, man.
I see you got your tinfoil hat behind you there, so that's okay.
That's right, man. It protects me from all the nasty Spartans. It's beautiful. Keeps me nice.
Before we go off on that tangent too far, where is 11K on this chart here? I just want to just zoom it in so we can see if there's like a significant swing point.
That's what I'd be looking at.
Right. It's your purple candle there, which I think is red for you.
Yep. Yeah, that's it. Yeah, September 2020. Below there, maybe Bitcoin does something to the upside very long term, 20 years down the road or something, but it's going to be so long that I think most people are just going to lose interest. And also keep in mind that, when Bitcoin inevitably does bottom, no matter what price that it is, it's probably going to take, you're probably going to witness another similar boring period as what you're witnessing right now. It's going to be 2, 3, 4 months of sideways and very dull, very, very boring. And then, starts to slowly move up and everyone starts to doubt it. And well, while no one's paying attention, it starts to slowly do that constructive upside behavior. But there's really no rush as far as I'm concerned. Especially if you are very high term timeframe angled. The simplest way to be looking at it is just the weekly trend. The weekly trend has been your friend since the dawn of history for Bitcoin. Any reversal has been followed by a macro major shift in direction. Does that mean that you get to sell the ultimate high over here? No, but you get to sell 48, 49,000 bucks or whatever this tick is over here before this next 50% plus downside move. So these sorts of things, will keep you safe if you're more long-term. And as you can see right now, Bitcoin doesn't even have a higher low in first, let alone a higher high. So it's still going to be some time, I suspect.
Got some time, but it's good to note that point there because it's something that I guess a lot of new people, and it takes a bit of practice to understand where some of those key breakdown levels are, because you might think, oh, this is the cheapest thing ever, it's going to go back up, and not realizing that if it breaks key critical structure, that essentially means that smart money, big investors, all this sort of stuff have literally got out of the asset because they don't see a future for it. And it's going to need to have some sort of massive fundamental change. It's going to take years to come before it's going to be accumulated again. And so although we want to see downside, you don't want to see too much downside because that's the big breakdown. And that happens
Yeah.
across. Well, that's why we don't invest in altcoins, do we? It's just
No.
you trade them for more Bitcoin or more dollars, and
Yeah.
altcoins, they break down like a bag of shit, don't they?
Yeah, exactly. Just out of curiosity though, man, what's your sort of price for the same criteria?
I was looking at 11.5. That's
Okay.
like as a zone. I've put that on
Yeah.
my videos for a long time now. Between 11.5 and 19.5 is a
Right.
reasonably good like DCA zone for Bitcoin, just as like
Okay.
a simple plan.
Yeah.
But for the downside, if it's not 17.5, which is the current low on the spot market, and for the futures, I believe it was just last week was the low, was October. The spot market
Right.
hit 18K. Sorry, the futures market 18K.
Yes.
My downside is sort of sitting around that 14 to 16K if we were to see
Yeah.
like a spike down.
Yeah, I'm kind of in the same area as well. Like if it really starts to head much lower than that, I think we got bigger problems on our hands, just like around the world as well. So hopefully it's something like that, because as of right now, you're kind of getting the opposite but equal of the moon boys that you got about a year ago, where people were talking about 200,000, 500,000, a million, whatever the hell. Now you're starting to get people, after already Bitcoin has come down, 70% or so, I think somewhere around there. Now people are like, okay, but it's going to be another 70 or 80%. It's like, starting to sound a little bit more greedy, a little bit more irrational. Just my personal take, I suppose.
Because even 84% down from the top, from memory, I think it was coming out at about 12 to 15 grand, somewhere around there. Yeah. So I don't think it's going to happen like last time, because the other ones had such a big boom up. Whereas this time we had a big boom up, but not in nearly anywhere as much as the previous cycles. So maybe it's compressing in the downside as well.
Yeah,
but you were just talking about macro stuff. If you don't mind changing pace, macro on the economics. Do you get into the S&P, NASDAQ, dollar, the Dixie and that sort of stuff in your analysis? And if you want to give us just like a very, very high level thought on the situation at the moment.
Yeah. So I look at it, I don't trade it. If we go over here to SPY, basically, I think that which is the major ETF for obviously SPX. I think generally speaking, this one comes down over the next year or two, something like that, somewhere around 3,000. It kind of makes sense to me from a macro standpoint, just to explain my thesis, is that from March 2020, the old Rona times, basically what happened is the Fed and pretty much all central banks just started printing money like crazy, which led us into a liquidity bubble. And that liquidity bubble is what is now popping. So with that in mind, it kind of makes logical sense to me that, we come down somewhere around there, somewhere around where the Rona times happen. Maybe not exactly to those lows, but maybe somewhere within reasonable, in the reasonable vicinity. So yeah, without going too much into depth with it, Dixie is very, very difficult in my opinion to get, just because, it's not first off, you can't trade Dixie. Second off, it's not a direct relationship to any of these risk on assets. It's a direct relationship to a basket of other fiat currencies. So I think it's really only relevant if you're trading Forex, other than that, I don't really,
you don't like it as a inverse correlation thing to commodities?
I think
at times, not always, but at times.
Yeah. Here's the thing, man. It's like, if you really want to go deep into like YouTube analysis and, want to appear smart and everything, which is good. There's nothing wrong with that,
like
obviously.
Me.
Dig
at me. I like it.
Well, I don't mean that in any way, shape, or form towards you, just to be 100% clear. But people make it sound like, when Dixie has a 15-minute downside move, that you should expect your assets to move up, your risk on assets to move up in that same 15-minute candle. That, in my experience, does not work. What works is the long-term trend. So if you're looking at like the weekly trend for Dixie, then it should naturally play somewhat opposite to your risk on assets. But if you really look at the relationship, it's just always better to be more specific and look at the asset that you actually want to trade. So it's for funsies, kind of, in my opinion. Does it matter? Yes. Is it actionable for myself? No, because I'm low-term time frame. But you're more high-term time frame, so it does make more sense for you. It does make more sense to get a gauge of the macro trend, and they should somewhat be playing opposite each other on higher-term time frames, like a weekly. So yeah, I can definitely see the value in it. Just it doesn't have a humongous value for myself.
Totally understand, because of you're just looking at trading, and for the short term, it,
Yeah.
like you said, doesn't make sense. You know, I'm
Right.
figuring out my investment portfolio longer term, and watching the real estate cycle and that sort of stuff. So yeah,
Yeah.
for
That
different
makes
sort
a
of,
lot more sense to me. That makes a lot more
yeah,
sense to me.
and, and for us, because we're in Australia, and other people watching around the world might not be in the US. It can be important to take your profits out. You know, if you've got US dollars that you're holding, and you think US dollar is going to fall, then you might want to just
Mm.
change that back into your local currency, so that you can then go and buy whatever it is you need to buy, pay your rent before, US dollar might drop 10 or 20%. Like, who knows?
Yeah.
But yeah, it's good for those sort of macro things. In these times, yes, it's boring. There's not much going on. The only thing we can really do is talk smack, or go out and enjoy ourselves. What's one thing that you would do in these times, so that you remain with the markets, that you would advise, friends or other members of yours to do? Like, what's one thing that they can do to remain with the
So
market, so that they're fresh for the next stage?
honestly, man, this is not what we should tell YouTube, but just leave. Just leave right now. Like,
Take
there's
a
nothing for you to
break.
do. There's nothing.
I do. Yeah.
Like, the
Take
only
a
thing that
break.
you're gonna
Yep.
yeah, the only thing that you're gonna do right now is mess your own self up. So let me set the context for this a little bit. That was a bit dark right there, but
We didn't
in
rehearse that
my
one either. Taking a break is a good thing. Yeah.
One of the things that I've really resolved to, like, if I am thinking about long-term investments, is just look, Bitcoin's already come down like 70% or whatever it is, 74%, I think it is, to be exact. What sort of percent allocation do I want to have at these levels? Because, I'm happy to be a buyer here for some of my long-term stack. And so I put that number at about 30%. And I also buy some dividend stocks and dividend ETFs and some growth ETFs as well. And it's like, look, does it probably go lower? Probably yes. But if I'm thinking very long term, I just, I don't know the future, obviously. I want to be some in here because, things have come down rather hard. I'll buy some lower as well. If things get around that $13,000, $14,000, $15,000 number, I'm completely happy to put another 30% over there. And then the rest of it, I'll wait for an actual confirmed reversal. And that's just what I've resolved to do. And anything else that gets in the way of that is just a distraction. So to me, it's like, look, decide how much or if at all you want to be in the markets right now, and then just leave until your next things come up, because you're only gonna mess with your own strategy. And when you probably look at things from like a long-term perspective, you would have been like, man, if I just had done this, I would have been fine. If I employed like a 10-year, 20-year, 30-year future look, I would have been completely fine. It would have been, easy enough to do.
Maybe we'll say that for another Crypto Simps episode in the future. Something a bit more
Let's do
macro, and
it.
how you set up your investment plans. I like that. So thanks once again, mate, for jumping on and
Dude, a pleasure
pumping
as
out
always.
another Crypto Simps episode with us. I think we made it to episode 21 now, so that sounds pretty cool. On the
Something
rest
like
of the
that,
episodes are on Eric's channel, which you can find a link to in the video description, and his fantastic Twitter over there, which he has a lot of engagement with his beloved followers. So thanks for the macro outlook. Approximately 25% pump or dump, up, down, or sideways, as per usual.
That's right.
Any last words?
Just thanks for having me on, man. It's been a pleasure to one, see you, man, a good old friend, and then also speak with the community again. It's a pleasure, man. It's an absolute pleasure. So thanks for having me on, and we'll have to do it again sometime soon as well.
Always. Thanks very much, mate. All right, guys. Thanks again. Check out the links, and we'll see you at the next video. Until then, peace out.